Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So what looked to be just like a range-bound inside day, which made sense considering the size of the move we've had from the Monday reversal into yesterday's follow-through with today's action. It still looks like an inside day, just the way it happens is definitely a lot more difficult. A lot of these moves feel like they're on air and they happen whenever they want. And it seems as if, the last 15 minutes, just when the market was going for highs and we pushed through yesterday's high, news came out that the ECB is going to play a little bit of hardball and not accept their bonds as collateral, whatever it is, you have to read into it. Bottom line is market, then got back below it and fell, like 10 to 14 handles and, pretty much failed at the upper end of the range for now. So lots of stocks came off high, some held in better. You had to really just be very quick, nimble, take trades, and there was that fine line is getting a lot thinner on whether or not you add and lose, or you stay with it and lose, or you get out at the right time. Because I know a lot of people at the end of the day started to get short, or not even short, got squeezed out of their shorts as we pushed through the prior high, saying I'm not fighting this anymore. And then within 3 minutes, like, oh my goodness, how the hell did I just get out of my short? I've been sitting there all day long. Or how did I just lose money being long? I sat there all day long and they took it back in 15 minutes. Just the way it is. Anyway, you look at the SPX, you could see, here we are. This was your reversal on Monday. That was your Red Dog reversals work both ways. This is 1993, right? Pushed below at the lower end of the range, got some shorts involved, reversed it. That was there. So 1993 with your, down to 1980, so that's your stop. Then you had a big move. You took out this 2024, engulfed the moving averages right back to the upper end of the range, and then pushed through a prior high, which this high here was 2050, went as high as 2054, and then came in. Overall, if you didn't trade today and you're like, oh, what happened today in the market, you'd probably be like, oh, looks kind of normal, right? Big move, inside day / small reversal, still in the top third of the range. So seems as if it stays here, perhaps we'll get another move higher. But if you traded it, it definitely had its ups and downs. Excuse my pun. And I'll show you what happened here. You look at the SPX. Basically, this is what happened. So after basing for the entire day, pretty much, so it made its move early on, based for the entire day, broke out. Like, I don't know when this actually happened, broke out somewhere around 315-ish, made a high, and then pow. And then in one bar, it took out this entire 2 hours. That's a little hard, especially if you were saying, okay, I'm going to be short versus that. You got stopped out, and if you said, okay, now's my time to get paid, and you didn't take it, boom. And now here we are right down at around 2041. So again, this type of action at the end of the day is definitely hard. And you go to the daily chart, though, and it seems as if you have a small reversal, which says, okay, now we're going to pause here at the upper end of the range, but you never know with tomorrow's gap. But that had to get you to lighten up a little bit, especially if you had your entry here, rode the gap and go. So maybe in this push-through failure, you sell a little bit. Some people might even be short into tomorrow. I still have some options. I have small Apple, I have my Twitter options, and my FireEye options, and I have a little less Apple than I have had the past few days, just because. While I'm talking about Apple, it still looks fine, 100% fine. Just unfortunately, we just lost a price. We all love round numbers, and Apple, had the round number from 120. The prior high here was 119.75. It pushed through. This too looked like it was about to go to 121. In the end of the day, I was sitting long on both my accounts, and basically pulled in about 90 cents, and it still looks okay. I'm still in my monthly options, and I'm in smaller stock just to see what happens tomorrow. You look at the 5-minute chart here too. This is horrendous. Hanging here all day if you were patient, okay, and sat in it. I sat in this thing all day. I've been sitting in it since yesterday, almost since it broke out here, and then all of a sudden breaks out. So if you added, which adding on strength has been bad, at 120.35, or if you said I'm going to be short, and I'll use this as my stop because you never know where it's going to go. It could have went to 121, 122, 123, who knows. You could have got stopped out right there, and then pow. So if you added here, you got hurt, and if you got stopped out right here, you pissed. So anyway, this is where it closed, right in the lower end of the range, and it's still fine, but as a trade, just not the easiest, to handle. So let's just look at a few other sectors, the Qs. Not the end of the world. You're not always going to close in the highs. Here's your bottom end of the range. Here's your red dog reversal. Here's your gap fill. Filled the gap. We talked about this gap fill, filled it, and now who knows really what's next. You have your upper end of this range, which is still not out yet, so we'll see what happens in the next few sessions. Still, it doesn't look like a horrible day if you just look at it now. But if you were using this as your stop and you were caught here and you didn't switch gears, you're like, okay, I can't take the pain anymore. I'll give it to the high of the day, which was 103.03. It went to 103.55 and then reversed. So you probably got stopped out. Now you're not sure what to do. So anyway, I would use this 101.68 as your level there. IWM was strong all day too. Again, not the end of the world, but here was your reversal at the bottom end of the range, and here is the top end of the range where it may not be ready just to go through there in the third day. So we'll see what happens next. We'll see if today's move leads to a little bit more weakness, or that news headline was taken out of context or whatever, and it hangs in here and then continues. The mid caps actually broke out. XLF, here you go. It also, small try here, tried to break above after a big red dog reversal into support into a rest one where 3 days later. So it's kind of funny because, there are guys out there that don't believe in charts and they bash charts and they think all we want to do is buy momentum. But we're not like that. We have our rule where first day when an igniting bar happens, we probably get long because it could start a new move. Second day, you could add if it's for real. Then we sell day 3 and 4. We're not looking to be buyers of day 3 and 4. And yes, do we like upper level flags like you saw in Apple where it's been hanging out there in front of a 52-week high and there's an action area? Yes, that's exciting. But we're not chasing day 4, day 5 and looking at like oil. Yes, everyone's like, Red Dog, do I buy oil? I'm like, it's just like a stock, day 3. You're not buying day 3 after a 20% move from the lows. You missed it. Didn't know it was going to fall apart 8%, but you don't have to if you're prudent and you have the right system. Okay, here is that 3-day move. And we talked about what it would take to have some commitment to it. We drew the Fibonacci numbers and said if it's going to hold 1880, maybe it's going to be for real. Okay, the reason 1880 because from the low to the high, that would have shown some commitment, to this type of momentum move, not just a squeeze. And that commitment was right here. So if you happen to have been long and you stayed long, right there when it broke, the 25% is for a trader. Usually that means it's fast and furious. Broke that. Opened here, hovered here, and that could have been your stop right there. Now, it did hold the 0.618%, but I don't like to be long things that hold that because that means there wasn't enough demand and enough power to hold it higher, especially considering where the USOs have come from. The USOs have come from Pluto basically to where they are now. Here's that trend. You look at it in hindsight, and all it did is rally 20% after dropping huge. Here is your trend that broke at the 8 and 21 day. Here's when it broke the 200 day. It's been below the 200 day since July, August. So here's so many levels broken. So all you had is, if you would do the Fibonacci retracement the other way from the high to the low, it, bounced not even 20%. So if that's it, it shows you that this trend is that strong. So probably going to be a little bit of packing and filling or backing and filling, whatever everyone likes to call it out there. But ultimately, we talked about how do we measure commitment, and this, is slight commitment, not momentum commitment that would have been if it held up there. Let's look at the XLE to see how much it gave back. XLE took it more in stride. Okay, you want to take a look at just say, your fib from either your red dog reversal here, okay, which was this to just say that. If you want to go that far out, still holding the top 3.28% if you're in there from this red dog reversal. And still above the 50%, so that looks pretty pent up. You could also say, okay, I want to give it from that. I want to give it from, the recent move that it just had. So let me get rid of this here. You can remove this, and then you say, okay, we'll see how we measure the commitment to this 3-day move with oil. So you go like this, and you could go boom to here, and then all of a sudden it still has held the top 382. So the actual ETF with the oil stocks still acting better than the commodity itself. So it's somewhat constructive for people who are trying to be long this. So it could continue to flag into this, and when it turns up, maybe you could buy versus that. If you miss this move, if you're looking to buy a pull-in, I would think that, for me, I wouldn't want to see it get much below this because then it turns back into a choppy mess. You saw that here when, you remember when you had that first bottom from December. Okay, it basically had the move, and it was flagging and looked okay, and then it broke, and then it broke below, and then it became a mess because it just retraced too much. So you don't want to see this one retrace too much. Let's see some, what did Amazon do today? Some high beta names still acts well. Netflix was a little weaker for the first time since earnings, but still just an inside day. This is at a really nice move from breaking above the earnings per share high. I gotta see how it handles this the next coming days. Getting a little choppier up here, but all in all, still hanging in there well. Google, still weaker, still in this flag, still hasn't broken out. That's why I said either you wait for it to break above 540, or you're in this flag and you're going to take some pain. And if it were to break below this, you get out. Because if you could handle the noise, if you were in it at 530 and it broke above 540, you had $10 in the bag, then you could add a 540 and you're already in the money. You have a great average cost. But the risk of that is it doesn't break above this and it turns lower and fails, and then you lose some money waiting and anticipating. So there's a difference between waiting for something and anticipating and being involved, and then being involved when the trade triggers. And there's different types of trade. There's a tier 1 in the flag, and then tier 2 when it breaks out. Or you could say, I'm not going to sit in this in tier 1 waiting. I'm just waiting for it to break out, and it all depends on who you are. Baidu, what'd you do today? You've been kind of out of play, still hovering down here. I'll tell you, Facebook. What a crazy, it doesn't look that crazy, but, I was in it from yesterday. They announced that offering, thinking it held here. So if I can't buy resistance and be a momentum monkey, let me buy a dip and be a dip buyer smart guy. Anyway, into the moving averages, it failed, but look how it did it. This is gross. Okay, looked good, hanging out all day long, okay, where, looked like a nice consolidation, ready to go, just like most things out there. And then, boom. Broke the 76.20 while the market actually was going higher. I was like, wait, what's going on here? Thank goodness I got out right there. Look, then all the way down to here. That's 76 to 75.40. That's, and in the last however many 10 minutes after sitting in it all day long, I could see why people are getting a little edgy. What else? Look at something like Ralph Lauren. That's why you don't take stocks into earnings. Stock was annihilated today. Boom. Okay, looks strong going into it, and there you go. But then on the flip side, you had Disney, which broke out above that pivot high, and now you'll see it, let it digest a little bit there. Tomorrow we have Twitter. I'm still in all my calls, and I don't know. Some people are starting to get a little bit more positive on it. The stock had a huge move up here back in the day. Remember when that's when you love stocks. Okay, I love a new issue. Not all new issues do this, but you got to love a new issue that has its IPO high, comes in, breaks above a trend line, which is what it did right here. Okay, followed the 8-day, closed above the IPO high, and gave you a really nice move all the way to 75 with a bull flag in the middle. That was a great trend, and then since then it's been a monotonous mess. Baba did the same thing. Remember the Baba to butt call? Doesn't this look very familiar to Twitter, where IPO high came in, went above 92, started following the 8-day, traded above the IPO high with a little flag, gave you another nice move before this RDR right here, and then it broke below the 8-day, and this is really when it's really started to change. Okay, that was your first signal. This is when I stopped playing it, as a pent-up momentum trade, and then we tried to buy and play this descending channel game, and that turned into a mess as it just never stopped. It never gave you a reason to truly hold it, which we didn't, because it never broke above this. So you had to be perfect and buy into the trend, and then all of a sudden earnings came out, they missed. It's in this little range. I've been watching it to see if we can get a gap, fill trade, but it hasn't happened. And if all of a sudden it starts turning lower, shorts are probably going to try and sink their teeth in below 87. So I'm just watching it, and if you can't get a gap fill, and people aren't saying it's cheaper down here from where it was pre-earnings, that's going to control the direction of the move. So we'll see. So with all that said, let's go real last thing, TLT. Talked about how if you got out of it when it broke the 8-day right here, okay, look at it at the 21-day, and look what it did. It went right off the 21-day. So from the highs here of 138.50 to 133, 5-point differential, and if you came in flat today, you had yourself a nice trade. It held the 21-day here, and it's been holding the 21-day pretty much all since November, so it was a good spot to try it. And I know Sperlin did it really well today, so good for him. And I think he has a few more. So now you'll see, does it reclaim this, or does it turn up, make a lower high, and then continue some kind of corrective phase? I guess we'll know more with the jobs number this weekend. So with all that said, not an easy day, very erratic, definitely random at times. There is movement at least, but sometimes it's harder movement when it's not tight and you don't know exactly when it pushes through an upper end of the range and fails in 15 minutes. There's nothing you can do about it except for play to your strengths and be comfortable. At this point, we'll see what happens tomorrow. Hope you had a good day, and it's been an interesting week, and I'll see you in the morning call with Brittany. Have a good night.